Kunal, thanks for tuning in to Countdown right here on BloombergQuint Live. It's a flat day for the markets, but the banks are sulking in trade. I must say though that the markets have really not gone anywhere. Just that at the broader end of the spectrum, Reliance, Bharti, and a few other stocks have moved higher, as a result of which the Nifty and the Sensex, which are down 0.5% in the red, are now just about even Stevens, but the banks have stayed soft, about 1% lower, and that will probably be the case. I just repeat though what I said in the trade setup this morning as well, but I would believe that most people will not take home very large positions on the index on the long or the short side, because there are 3 days of announcements from the finance minister. On any one of the days, the belief might be that there might be a market positive announcement that comes in, and therefore shorts might get caught on the wrong foot. And if no announcement comes in, then the markets may correct if the global markets are also weak, and therefore longs might get caught on the wrong foot. And therefore we are probably in a bit of a no trade zone right now, and that is maybe not a bad thing at all. But very quickly, just before I get to our experts, because they might have a different view, just want to mark what is moving and what isn't. So Vedanta up about 5.5% at 94. BPCL about 3.5%. Bharti Airtel has gained about 3%. By the way, Bharti, Reliance, both of them have, as I said, bumped up in the session. So those two are doing well. Yesterday, Nestle was looking very wobbly. In today's session, it's bounced back about 1.5%. So that is okay. So metals, BPCL, and to an extent telecom. Those are the 3 pockets that are looking reasonably strong. What is not looking good is Mahindra and Mahindra. I'm guessing there is some institutional selling happening out here, because otherwise the read-through in Escort's results for M&M was pretty positive. I'm not calling it too soon or trying to call this, but you never know. There might be a day of a green on Monday's session if the markets stay okay for Mahindra and Mahindra. Bharti Infratel, there's a tactical note sell call from Morgan Stanley, I think, and that stock is down. There is weakness in Z today, down about 2.5%. The hero of the last 2 days has just completely come off, but it's that kind of a stock. It's just very choppy and moves in a completely different direction compared to what you would have thought. And last but not the least, at the broader end of the spectrum, I just want to mark, by the way, the intraday of Vodafone Idea. That stock has bounced back very strongly in the session. So that is doing well. India Cements is up 8% at 109. The news came in that the Radhakrishnan Damani families hiked the stake in the company to about 20%. So that is keeping that stock excited. Emphasis, the results reaction. Zensar Tech, the results reaction. So both of them are doing well. What is not doing well, as I said, aside of fertilizers, I think Equitas Holdings and Oberoi Realty have cracked a bit in trade. Let's get in our experts to try and decode the current situation. Kunal Rambia, I'm told Johnson right now. Good having you, Kunal. Thanks for joining in. What's your approach to trade? Last half an hour of trade left. Are you initiating any longs or short on the indices, Nifty or the Nifty Bank?
Yeah, hi Neeraj. So the way you said very truly, 3 days, any announcement can come in, and that may be surprising. So what I'm looking at the Nifty is that you noticed last week. If you can recall our last week conversation also, we discussed the same thing, that there is a consolidation kind of zone which we expect on the Nifty front, and the bottom was seen to be somewhere like 9,050, on the higher side 9,600. So if the Nifty is right now near to that 9,050 mark, and today's bottom was somewhere near to that itself, I think going long makes a lot of sense here. If someone wants to play on the option front, buying of call would be an advisable thing, where the risk is limited and the upside can be decently till 9,600. On the bank Nifty front, I'm expecting, say, the range of 18,100 to say around 21,500 kind of zone. So again, unless 18,100 on bank Nifty and 9,050 on Nifty is taken out on the lower side, I would not really stay, bearish on the market. So these are my index related views.
But you wouldn't initiate a fresh long. You'll do it via calls.
Yeah, absolutely. Because we need to keep that announcement factor in mind. So the risk limited on this side.
Yeah, I think that's prudent. I mean, why not? You don't have to trade every day. Sometimes not losing money might also be, or a lesser risk trade might actually be a good thing to do. What about specific stocks, though, Kunal? There are individual stocks moving around. What are your thoughts there?
So, the first pick of mine is, again, it's going to be a positional bet, and that's a BEL. Bharat Electronics, what we saw is recently it made a low of around 60, and that was the same low couple of days back, couple of weeks back also. The stock is decently come down from the top, almost 78.6% retracement right from the top till bottom, decent consolidation, and with volume today buzzing in trade. So, keeping that in mind, I'm going long on the counter. My positional target would be 90 to 95, but short-term target can be expected to be say around 75. And the positional target can be 90. And once it crosses that 90-95 zone, I think it can remain in our portfolio for a longer period of time. That's the one PSU bet. The second again is going to be PSU, and that's Coal India. Now again, what we saw in Coal India is right from the top, the stock is butchered down significantly. But again, since a month, the bottom is almost at 120 to 125. So keeping the stop loss of 125, I'm going long on the counter. I'm expecting the first target to be around 145 to 150, and once that target is crossed on the higher side, I think 175, 180 cannot be ruled out on the counter. So these are my two positional bets, and one is the option bet again, and that's on Bajaj Finance. Now the interesting part is that since 3 days, the counter is trying to remain on the higher side of the trade day, but unfortunately, it's closing near to the low itself. Now, if you look at the option premium, they are pretty attractive because of the event days. So, if you look at the option, which is 2,300 call option, that's trading somewhere in the zone of around 75, 80 rupees. So, my bet is on that to sell. The reason being, even if after 3 days the counter gap up opens by 5%, my risk is going to be say around 25 to 30 rupees itself. But by any chance the market opens flat or negative, we may earn decently on that. So I'm going short on the call option of Bajaj Finance, 2,300 strike. I'm selling at around 75 to 80. My stop loss will be say in the zone of around 130, and target can be say first half, that's around 40, and later we trail the stop loss and take it to zero level. So these are my three trading bets.
Okay, just one quick follow-up. Today, telcos have shown a bit of resilience. Kunal Rambia, both. I mean, I'm classifying Reliance as a telco, but Reliance and Bharti have bounced back. Any thoughts on either one of these names?
Absolutely. So, Bharti is something where we were banking on since morning. If you look at the bottom of Bharti, where it made on say 1st of April, and the bottom was around 416, 17. From that zone, there is a trend line which is emerging. And the recent fall, which was from 575 odd levels to around 540 levels, that was the wave 3 for my counting. So right now we are heading for now wave 5. So third wave was higher, fourth wave was lower, and now we are heading for fifth wave. I'm expecting the counter to reach around 580, 585, and then probably take a pause. Now we are heading for a result also on Bharti, if I'm not mistaken. So keeping that in mind, near to somewhere 575, 580, I'll turn cautious. Till then, I'll stay bullish, and my stop loss for time being is around 530 to 535.
Okay, well, watch out so for these names as well. I'm guessing Deepak Shinoy would be with us in a moment from now. Let's try and see if we get him. Do we have Deepak Shinoy? Okay, I think we'll just get him in moments from now. Viewers, the other point that you have to monitor is India Cements and what this stock is doing in the session today. Look at that name. That's up about 4 or 5 odd percent in trade now. The news bits came out that the shareholding pattern of India Cement seemed to suggest that the Damani family has hiked stake materially in India Cement, as a result of which this stock is up about 8 or 9%. So really smart move. If you log on to my Twitter timeline, we've also done a story on why is it that the Damani family may be liking India Cements when the analysts aren't. Do try and read about that as well. But just wondering, from a chart or a trade perspective, is there a view on India Cements, Kunal?
Absolutely. So, Neeraj, right in the correction of 2008, the counter came down and made a bottom of around 68 to 70 zone. And since then, every time, whenever the counter came down, was in the zone of around 65 to 70 itself. There was in one exception, and that was in 2013, where it made a bottom of around 47.5, 48. But otherwise, it was in the zone of 67. Right now, also, it made the same bottom of around 70, and it bounced back. If someone wants to play on a momentum basis, there is an inverse head and shoulder formation on the weekly chart, and the neckline is placed at around 115. So buying would be about say 115, keeping the stop loss of around 97. One can expect the target of around 175, but otherwise the counter is making that broad consolidation base, and whenever such formations happen, along with improvement in fundamental factors, we can definitely accumulate the counter. But at this point of time, I would not really go and buy. Either I would wait for the breakout above 115 on a closing basis, weekly closing basis, or I will wait for the counter to come down to 95, where my risk reward ratio seems favorable.
Okay, Deepak Shinoy is with us as well. Deepak, good having you. Thanks so much for joining in. Since we are on the topic of this, I'll come to the bigger topics in just moments from now. But just wondering, for a marquee investor like RK Damani to up his stake in a South cement company to 20%, is that symptomatic of what some people might be thinking about the cement space? I mean, do you have a constructive view on cement?
Firstly, I think, although, Mr. Damani is very respectable, I don't think we should just follow blindly what a big investor is doing. Many of these things are not necessarily what they seem. So There could be multiple reasons for why he has purchased India Cements. I don't think it is wise to. It would be wise for us to look at his past investments, especially in many such counters where it's been a head fake of sorts. In the sense, if you thought that was a thing where he would have kept his investment for a long time, maybe it isn't. So we don't know what their reasons are. But I don't particularly feel that cement is a great play at this point, not for simpler reasons, but I think largely because the activity recommencing on the cement front looks less likely, and perhaps if you're actually going to bid on infrastructure moving back, then a company like L&T would actually make more sense than most of the cement plays, because L&T is valued at relatively lower valuations compared to anything that you're seeing in the cement space. So I'm not very confident that that's the way to go forward. We don't have any cement investments. I don't intend to have them in the next few months. Of course, everything can change, and this is not the greatest season to buy, also because monsoon, there's going to be no cement sales anyways. That's usually what happens. Cement doesn't perform well in a monsoon, so any recovery in the cement sales will only happen in the December quarter. So you might as well wait to see how that pans out. I'm not really keen.
Deepak, what's your view? Are you putting money to work right now? Because the first two pressers don't quite spell out. Maybe we don't have the balance sheet, it's fine. But I'm saying that when the announcement about 20 lakh crore stimulus came in, and I'm sure when it was mentioned all inclusive, we all anticipated that some bit of it also includes what the RBI moves were. But these numbers, addition, the math sounds a bit ingenious and not quite the support that maybe we could have wanted. Now, whether we have the balance sheet or not is a separate thing altogether. My question to you, therefore, is that are you constructive on the markets, or do you reckon that we are headed lower, and there's no harm in saying that we are headed lower? We'll buy at lower levels.
Well, I mean, it's not possible to say that we are headed lower or not. We can just make our guesses, but it's not necessarily that that's what's going to happen. But here's what I think, and honestly, look at it from the perspective of someone who has announced that they're going to do 4 days of these grandiose announcements. Are you going to announce anything big on the first 2 days? Possibly not. I mean, you want to put your best for the last day, leave the world with shock and awe, right? So you want to possibly keep the first 2 days as very ephemeral, something but not much, and that's exactly what's happened. They've announced a lot of big numbers, but a lot of these numbers don't translate into actual cash being paid out by the government. I think till now, everything, if you add up, the government is probably not paying more than 10 or 20,000 crores in cash, which is almost next to nothing. But the next 2 days, I think, will be should be at least bigger announcements. If they're not, of course, the game will change, and we don't have a market running at that time to be able to figure out what the reaction should be. Strangely, we'll say make in India and go local, but then we look at the SGX Nifty for directions on how our own market is going to react to our announcement. So I don't think I'm hoping the next two announcements will be better or bigger, but also that this going down will happen regardless of what announcements come. In fact, the bigger the announcement, the more likely the markets will react negatively for the first few days until they kind of realize or see some of the action on the ground. So it's not necessarily true that we won't go down from here, but it's also not necessarily true that we will. What I would say is take a balanced approach. There's still stocks doing really well in spite of the markets having fallen from nearly 10,000 back to 9,000 now, and some stocks are actually higher or reaching all-time highs at this point. So if you go towards companies that are well managed, that have a business proposition that will actually be helped when India recovers from COVID, regardless of large government action, and those are the stocks you want to stick with, rather than stocks where without the government intervention they will just be dead.
Okay, well, let's try and take some queries as well. We have a few, and we should try and take one or two if we can, really. And there is a view that Preeti Nair is asking for on Glenmark. Now, there are a bunch of pharma companies which have done well. Bunch of them have stayed slightly low-key compared to the others, the likes of Lupin, Glenmark, etc. Yeah, do you guys have, Deepak Shinoy, do you guys have any exposure to pharma? Would you want to take exposure afresh? Any thoughts on Glenmark individually?
I don't have any Glenmark. We do have a few other pharma companies, some MNC Pharma, which is in India. And we've seen the stocks do well. Abbott, for instance, has actually more than doubled in the last 1 year, despite the market having crashed 20%. So it's very expensive. It's not a cheap play at all. But the performance-wise, it has done fairly well. And what I feel is you got to have your foot in both the camps. You got to have the foreign MNC brands that are working in India, and you've got to have the Indian either an API or a formulations company that can harness opportunities going forward. There's not enough right now to say that a lot of business will come our way, but I think well-managed businesses have the potential of saying we will. Just the fact that some of them have done capex in the last few years, that capex is coming online. There is a push to de-risk from China. Perhaps that will bring more business to India, and some of them will have capacity that can be used. The other thing is that the US FDA itself has gotten a little bit lighter on Indian companies, which will allow more FDA approvals and perhaps planned approvals to go through, which will help in terms of additional business as well. So you want guys who can take advantage of opportunity. The opportunity is not yet there. So I don't have a view on Glenmark per se, but I think having pharma now is a good upping the weightage of pharma in your portfolio is a good idea.
Okay, so that's one more thought on the pharma space. Unfortunately, no specific view on Glenmark, but that's okay. I think the other bit is a couple of technical calls that we want, and Pritesh Mehta is also joining in on the conversation. Pritesh, we'll come to the index strategies and etc. in a bit. Just a quick thought on HDFC. Anand Kumar is asking if there is a good entry point for HDFC at the current levels. What are your thoughts?
Yes, now see, the financials and banks have been the big dragger in this market. But if I'm supposed to buy anything of the lot, I would be with HDFC. If the stock is available back around 1600 levels. Now see, we have seen a sharp decline from 1900 levels back to 1600. A 300 points correction in this counter, I would go and buy it. But I would like to stick with this stock only rather than focusing on venturing out in some other things in financial space.
Okay. Any view on BHEL? That stock has been active the last 2 or 3 sessions, has hit many highs recently. What is the trading position here, Pritesh?
Already the stock has moved higher from the lows of 22 to, currently it's trading around 27, 28. I won't get into it this much because 24% rally in this fixed trade, it does not make sense. See, this was a dead rubber from trading perspective couple of weeks back. Then pullback. If you get into this stock at these levels, your risk-reward ratio won't be in your favor. So better avoid it.
By the way, I must say there is a bit of a pullback in Vedanta intraday. That stock was looking very active and now down, now no longer 6%, about 3.5 or 3.7% currently for Vedanta. So it's cooled off quite significantly. As is BPCL, by the way, the day is high. For BPCL was 324, it's come off to about 317. So there's a bit of a pullback into some of these active names. Reliance 2 is marginally lower from the highs of 1466. So be mindful of that. I have a question, fundamental question, Deepak Shinoy. Would you be a buyer into telecom? Today I heard a contra view as well, but that's okay. That's what makes the market. What are your thoughts on Bharti or Reliance, maybe even a Vodafone?
Not interested in Vodafone. I think Bharti and Reliance become big players here. We've been invested in both. Reliance has this rights issue which will complicate matters a little bit, so we temporarily stepped out until this rights issue is done, and we'll come back in. Not because of anything else, because the rights issue will be separately traded and we don't want to be in limbo for this time. So maybe lucky because the stocks corrected about 10%, which gives enough room to enter back in. But what's interesting about it is the fact that they will be able to charge more going forward. I don't think demand will die if they increase prices by another 10% or 20%. And the fact is that this is what people are going to need, almost like a basic service now. Because if you tell people that you have to have an Arogya Setu app before you enter a train or a bus, you don't need data to be able to just support that. And that is going to come from one of the two big telecom providers, assuming Vodafone Idea is not there. But you're going to need this as a basic service. And if a marginally higher price can ensure that these players are profitable or stay profitable, then I don't think it's a big deal for people to pay that. And with that 10%, it makes a huge difference because they're very capex heavy businesses, very fixed cost heavy businesses, and any increase in utilization, any increase in price will actually dramatically change their books. And I think going forward, the game is not just in data; it's also in what kind of data you use. So there are lots of use of partnerships right now. There use of online translation mechanisms, language, automated bots and feedback. So we've seen a Reliance Jio, for instance, set up a COVID response cell almost completely automated using bots. When people come and ask it basic questions, tomorrow we'll have more of these come along as they may. And I think that's one of the reasons why I'm long telecom. I think they will survive and they will thrive in the days to come. Given that it's a two-player field, also makes it more attractive. Just buy both of them and let them fight it out. One of them is going to win. You'll make money either way. So that's one of the things that I'm focusing on. Having said that, the market itself poses challenges. So if there is a dramatic drop in the market as a whole, obviously these companies will get affected. But in relative to the other players, I think they stand a very good chance of both emerging quicker from it and also thriving in the post-COVID world.
Okay, let's try and take in closing strategies first before we talk more about any other names. By the way, Z Entertainment has completely cracked 3.5%, 3.7% lower now, 164 and counting. The other one is Mahindra and Mahindra. Both of these stocks are looking wobbly. We'll take in chart checks here very quickly, but first closing strategies. Kunal, to you, your top closing strategy.
So, Neeraj, I will still stick to those same stocks itself which we discussed. That is Coal India and BEL. At the same time, I will also look at now Reliance Industries by any chance, so as of now, I won't take any trade, of course, but then by any chance the counter goes below, say, 1430 or 1425, I'll definitely go short on the counter on probably Monday now, keeping the target of then 1255 to 1260 kind of zone. That can be the one. And of course, Z Entertainment, the best shot at this point of time, keeping the stop loss of 175, I expect the counter to reach to 140 zone kind of, because it's a perfect shooting star right at the top of the range.
Okay, so you're going a short on Z Entertainment.
Yes.
Okay, perfect short is what Kunal said. Pritesh, what about you? Your top closing strategy?
Now, see, we have two recommendations. The first one is buy on Ramco Cement. Now, see, the stock had been consolidating at the bottom for last 2 months. Now, bottom formation is an activity wherein stock does virtually nothing. In fact, it just keeps moving in a range. In this case, it was 560 on the upside, 460 on downside. Now it is confirmed the breakout. Yes, it is up by 5% or even more than that, but I'm expecting follow-up move to continue this counter. So buy for a target of 625. And second recommendation is United Spirits, McDonald's. Now see, we have seen a pullback after a bad trap variation on a counter figure chart. But a buy signal is seen. The setup has turned bullish in this counter, and thereafter, it's a contender for a bullish probable ABC pattern. So I think the stock has already confirmed the shift in the orbit about 529. So I'm expecting a target of 595.
Okay, watch out for both of these names as well. By the way, like I said, I think Z is the interesting one because until yesterday it was looking very strong. Last 7 days, 7% higher. In today's session, 3.5. Kunal believes it's a perfect shot. Bharti closing in almost at the high point of the day. Asian Paints has recovered quite a bit of lost ground as well, so do watch out for that. Deepak Shinai, one quick thought. We are very close to market closing, but just one quick thought on what did you make of the escorts commentary today?
I'm sorry, I haven't heard the escorts commentary. There's so many things happening.
Okay.
I'm sorry.
Are you by any chance bullish on the auto space at all, Deepak?
Yeah, very bullish on auto, not necessarily escorts right now, but on the two-wheeler and the four-wheeler low-end spaces. I believe, look, you can't enter a public transport vehicle anymore if you have a cough, a cold, or a fever. It's very straightforward. They won't even let you on. So what are you going to do for transport if you don't have any vehicle? You're going to buy something. And this realization may take a few months because once public transport starts to open up and people start doing these tests and saying, no, no, you're not going to be allowed, people are going to want at least some form of physical transport. And that may be a backup, that may be second or a first vehicle that's only used in these emergency situations. But I think that's what's going to drive a lot of sales in the coming year. Come also for the fact that the last 1 year or 2 years has been pretty lousy in terms of sales. We've got a BS6 move as well, and perhaps with interest rates coming down, more financing will happen rather than outright buys. But I'm positive on the lowest end, which means entry level bikes, entry level cars. The players here are again Hero Motocorp and Maruti. Again, we own both of these companies, so just biased in that mechanism. But I think this the auto ancillaries also, companies that make perhaps batteries, electrical equipment for cars as well. Those might also benefit. But I am positive. I think their prices are also much lower than they used to be. Some of them are trading at significantly lower P's than they were at the peak. In fact, or January itself. So I think we're in a good position to, it's a good point to build up a position.
Okay. Deepak, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Viewers, before wrapping up the markets, maybe we should take quick chart checks beyond that as well. So do watch out for some of those names. Reliance, Pritesh, 1453. Do you reckon there could be more upsides come Monday?
See, I think we had a leg of a move in this counter. Now I would wait for a decline before getting the stock. See, the stock already has staged a strong rally from 900 odd levels to 1600. But I think we are done with leg of a move. I would wait for a stock to come back to 1380, 1390 before thinking of building up a long position.
Okay. And lastly, BPCL has come off from the highs of the day, Kunal. What are your thoughts here? 2.5% lower, 2.5% higher rather.
Right. So, but then if you look at the entire formation again, right from the top of 375 to 305, the stock has turned out to be a very weak contender for the new rally, if at all it emerges. So, yeah, of course, at this point of time, shorting would not be advisable. Watch out for the levels of 310, 305 kind of zone. If that's taken care of, I think a relief rally till 340, 45 can be expected. But below 305, I would expect the counter to go to 270, 275.
Quick thoughts, Kunal. 20 seconds. What about escorts?
Escorts, I feel that the counter is making good formations, but yet to come out of the woods. So on the higher side, 840 if at all taken out, 920 target. Otherwise, decline till 760.
Okay. And Pritesh, quick 20 seconds. SAIL, the metal space is active today. What about SAIL, Steel Authority of India?
Now see, we have to be selective rather than sticking onto the steel side, because I just had seen the copper index doing extremely well last few weeks. SPDR metals and mining index has been doing well. The rally is yet to filter out in our space. In case if that comes in, then I would be with something like Tata Steel and Hindalco rather than SAIL.
Okay. Jam and both of you, just stay on. We'll just take in quick closing thoughts from you as well. But this is the nature of the day today, isn't it? Vedanta is closing in at the high point of the day. The markets have looked wobbly. I think a lot of dependence on what the markets do on Monday would be on what the finance minister says over the course of the next 3 days. I doubt that people's hopes should be high, considering what the first 2 days have been. But as Deepak Shinoy said, a lot of people believe that they'll save the best for the last. So let's wait and watch if indeed that happens. Maybe psychology does play a part here. Let's see what happens there. Bharti Airtel, 555 and counting, good going there. What has looked wobbly is Z Entertainment. What has looked weak is ICICI Bank, Axis Bank, IndusInd Bank. Those stocks have looked very, very weak as we've shut shop. And at the broader end of the spectrum, I think a clutch of names have come off quite rapidly in the session today. RCF, Deepak Fertilizers, National Fertilizers, Chambal, Oberoi Realty, etc. have all looked weak. Godrej Properties has come off as well. What is doing well? India Cement 16% higher. Bharat Electronics, I think, was an idea 6% higher. ITI is higher in trade. Zensa Tech is higher in trade. Navin Fluorine at 1506 is packing a serious punch, and Emphasis is up about 5%. So those are a few names that have looked okay. Final thoughts from our experts. Pritesh, what do you think the index could do? What about the Nifty Bank?
Let's just start with index first. This week action has baffled all the market participants because we have been over the place. At the start of the week, it marked a low around 9,000. The second day itself, we opened around 9,600. And thereafter, in today's trade, we marked a low around 9,000 again. So, it has been a complete Bollywood masala, but it is lacking entertainment because this kind of market does not provide opportunity to make money. And that has been a big factor. But again, as per the GAN studies and several yearly cycles, several cycles are concluding in the month of May, whether you look at 10 years, 7 years, 2 years. So I think we are on the verge of breaking out a range of 9600, 9100, and that would provide a directional move in the market. So I think till this range bound movement is in place, better focus on the index, on the stocks and sectors which are doing well, rather than focusing more on index. And coming to Bank Nifty, it has been a big dragger. It has been dragging the benchmark index over, and on stock consistency has been lacking. It has failed to close about 20,000 level. So I think I won't keep much hope with this space. In fact, on rallies, I would look to create short positions in this.
Kunal, will wrap up with that one question to you on the best performing stock of the afternoon on the Nifty 500, and that's India Cements.
So again, the way we discussed about India Cement, the consolidation is very broad, and I'm extremely optimistic about it. I was expecting the closing above, say, 115, 16 kind of zone, and exactly it is close to that level itself. So on Monday, if at all there is a continuation rally on the higher side, I think the counter is heading for 145, 150 kind of zone on the short-term basis. But on a weekly chart, the way I said, the consolidation is really very good. It can be a buy on decline kind of zone, a buy on decline kind of stock. By 95, near to the 95 zone can be a good risk reward ratio. I will not jump into the counter to add in my portfolio, but definitely it can be a trading bet for next week or probably couple of weeks.
Okay. Gentlemen, both of you, thank you so much for taking the time out and being with us today and giving us your thoughts. Really appreciate your time. And viewers, thanks for tuning in. I'll just I'll leave the show with a final voice on the show from Manish Sonthalia. It's been great, viewers, talking to you all these times on Countdown, and we'd love to have you on our other shows as well on BloombergQuint starting next week. But as we wrap up Countdown, hear out Manish Sonthalia of Motilal Oswal AMC. He says the lifting of the lockdown is the only factor that will bring about a positive sentiment in the market. The normally bullish Sonthalia says that as long as the lockdown continues, earnings will continue to get hit, resulting in a negative sentiment for the markets. Hear him out, and thanks so much for tuning in for all these months.
It's such a risk-averse environment. I really don't think capital expenditure, capex, is going to come anytime soon. I mean, at least next 12 to 18 months, it's an absolute no-no. Companies are looking for survival currently. So, I mean, whatever capex will come from the government's balance sheet, whatever this fiscal stimulus amount of front loading of infrastructure investments, etc. That is, you could that is how you could revive some portions of the economy through a multiplier effect. But honestly speaking, capital expenditure from the private sector is an absolute no. I mean, these are sectors best left ignored currently, and I think you are right. One should actually be looking at free cash flows, decent ROCEs, where earnings visibility is somewhat decent, and not too much of a capital expenditure, so that dividend payouts could be meaningful in the current environment.
Manish, I've never heard you sound not really somber, but and not even circumspect, but I can't quite figure out the term for it. But not you've normally been a lot more bullish than what you are right now, and therefore my question is, what would it take for you to turn bullish? Could it be some actions by the government which seem far-fetched because we don't have the balance sheet strength? Would it be a strong globe, which also seems far-fetched right now because of the increasing trade talk and the global economy being in a lump? So what would it take for Manish Sonthalia to, kind of be the Manish that I'm used to listening to?
So I think, Neeraj, between now and December, markets are going to be between, let's say, 8.5 to 10,000 on the upside. So currently we are at, let's say, 992. I mean, not too much of an upside in the next 6-9 months. I mean, that is the best possible scenario that I can look at, because earnings cut is still happening. I mean, given the numbers that have come out so far, it seems that the March quarter numbers, which earlier was projected, the reality is somewhat different. So I think for any bullishness to come, we should look at some visibility on earnings growth. I really don't think what can come through from the government or from the globe currently, because right now my biggest aspiration is that we move out of this lockdown. I mean, Maharashtra again now sees 31st of May. So in the absence of economic activity, how are the markets going to revive? So the biggest wish currently is that this COVID, some sort of normalization happens as quickly as possible, so that people get down to business of things, and that would actually mean that you could then look at which part of the sectors or which part of the markets would be more bullish or bearish.
How many places can you be at once? What if we said 9? BloombergQuint Live. We are everywhere.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This includes 32% of single women buyers across the top 8 cities. And finally, women are not just buying homes to live in, they're also investing in real estate.
I think real estate definitely is the step above jewelry.
So it's my personal endeavor that Puravankara and Provident are the first choice or the first place women home buyers come to buy a home.
I think it's that feeling of kind of apna ghar.
To get that, it's not going to be in place to make a difference on the unemployment numbers this year in any major extent.
Okay, are we underestimating, how long it'll take for consumption to go back to what we had before?
Our expectation is that consumer spending drops again about in line with GDP this year. We think we'll get a 10% bounce. We'll make up maybe 30%, 30 to 40% of the huge drop by the end of this year. but it's going to take well through next year to get all the way back anywhere near where we were pre-crisis. This is, when you have shocks like this, as we've seen in the past, as we've seen after large recessions in the past, as we've seen particularly after epidemics, consumers are cautious for a long time to come. Saving rates tend to rise significantly. Precautionary saving we expect to see up substantially. So this is going to be a long, slow recovery in consumer spending, no question.
Peter, we see a ballet in Washington. A fiscal stimulus is very program-centric. I would call it almost technocratic. Do you, Matt Lazzetti, Torsten Slok, your team, do you just assume with the grim view you have that we will go to outright wage and payroll substitution for individuals and for small business?
Well, I mean, this is what you're seeing to fill the hole. I mean, it is a huge hole, and we can't stop the huge drop in activity that we've had, but we can prevent a much worse outcome by supporting income like this. We went into 4 years of a Great Depression when we failed to fill the hole back in the 1930s. This action, this direct replacement of income, the direct support to businesses to get jobs back is what we think allows the economy to recover to the point of avoiding a much worse downturn. Yes.
We've seen any number of views change this week, and as I said, folks, many of them catching up to Deutsche Bank, and I will state, folks, unequivocally, in all my history here, that's the grimmest view on 90 days of the American economy I've ever contemplated. We'll continue with Dr. Hooper. I'm sure this will be addressed by John Farrow with Dr. El-Arian. They'll do that in a must listen in the 9 o'clock hour as well. Stay with us from London, from New York. This is Bloomberg.
This is Bloomberg Surveillance. Tom and Francine from London and New York. We're back with Peter Hooper of Deutsche Bank Securities. Peter, we're talking a little bit about the U.S. economy overall, and what more and more markets are looking at, market participants are looking at, is a new phase of a trade war between the U.S. and China. How much more uncertainty would this bring to already a very fragile world economy?
Well, Francine, global trade has plummeted with this downturn, and reopening a trade war on top is really not good timing at all. We have seen some recovery in activity in Asia, China coming back, but no question the drop in trade, the decline in activity in the U.S. and Europe is a major drag there. It's unfortunate that the global politics have taken a turn for the worse here, and I think trade war is just not the timing's not right on this one.
Okay, but how much would a second trade war actually accentuate the global downturn?
I mean, the negative impact of the